the way I've been doing this is just the way you described it.
Mhm.
So once I ran out of my own cash, I saw more and more deals coming my way. So I found a few investors, and uh, I presented some deals. I told them, like, this is what we are doing. There's how much I can pay you,
Mhm.
and these are the deals that we are going to get into. So I was very transparent. So I was paying my investors, 10, 11% on their money, and I was making a little bit of spread on top.
There are millions of real estate investors out there, and most are stuck with just a couple of properties. They want financial freedom, but their small portfolio ends up costing them more in time, effort, and money than it's worth. Getting out of the rat race seems harder than ever. This show will help you do more deals, better deals, and bigger deals. Finally, you'll be able to reach your income and lifestyle goals. How? By attracting and leveraging private money partners and their capital. Now get ready to raise more money, because here's your host, Dave Dubow.
Hey, folks, welcome back. Today, our special guest is Eugene Nilus, who is zooming in from beautiful Bay Area, California. Eugene does a few different things with real estate, which I find very, very interesting. He's got his own portfolio of small multifamily properties, which he's divesting of right now, and he's going to be getting into larger multifamily properties. He also does flips with partners out of state. And what I really find interesting about Eugene is his primary business is hard money lending. So we're going to dive into that. Eugene, welcome to the show. Great to have you.
Dave, thank you so much for having me.
All right, my friend. So I'm hearing an accent there. It doesn't really sound Northern California exactly. So tell us a little bit about your backstory and what got you to the country and what got you into real estate.
Yeah, absolutely. Okay, so you're absolutely right. This is not the Native American accent. So
Pretty close. Pretty close.
I've been born to Ukraine.
Mhm.
I immigrated from Ukraine with my parents and my family in 1997.
Uh-huh.
I was 19 years old at that time. I have already finished a few years of university back in Ukraine.
Yeah.
And when I came to United States, I decided to continue my journey in the educational space, right? And joined the city college. Even some people say, city college is not really a college. But I spent only 1 year there, and I couldn't continue.
Mhm.
I did a 3 month course in web development, and went to a tech company to work for a tech company.
Okay. Very good. And then when did real estate come into your world?
So real estate came in about maybe a little bit over 4 years ago.
Yeah.
Although the funny story is back in 2004 or 2005, like around that time, I was a, a mortgage. I was selling mortgages, so I was working for a broker.
Those were the heydays of mortgages, 2003, 4, 5, 6. Big
Yeah,
time. Yeah.
yeah. So, and I spent about maybe like a year or so selling mortgages, and that was between the times when I used to work for a tech company. If you remember, everything went down in 2001, and lots of tech companies started closing down.
Yeah.
So I lost my job, and I went to sales. So I was in sales. I was working for a few companies outside of the tech world. One of the companies that I used to work for was a brokerage, real estate brokerage.
Mm.
And I did mortgages for about a year or so.
Yeah.
It was an interesting experience. I think I was good at doing mortgages, but I did suck at finding leads. So
Yeah. Makes it tough. Yeah.
So, and then I decided to continue my journey I decided to go back to the tech world, and I transitioned from being a web developer to a marketer.
Okay.
So in the past decade or so, I was in marketing I was in marketing department.
What kind of marketing? What?
So I was working for different companies, small ones, big ones, B2B, B2C. But I was on a lead generation in lead generation space
Uh-huh.
and demand generation, like we usually we say it in the tech world. So basically, overseeing in my last company, I was overseeing online advertisement.
Mhm.
I was in charge of about $6 million a year to place ads on Google and other different online channels and offline channels.
Mm-hmm.
So, but probably like about a year ago, I got laid off when I was a part of the 20% of the company that got laid off.
Yeah.
And see, at that time, I was probably about like 3 years in real estate.
Yeah. So how did your real estate journey start?
Yeah. So it started right before the COVID.
Yeah.
I listened to Bigger Pockets. I think I started like everyone else. I listened to Bigger Pockets podcast. I read a book, Rich Dad, Poor Dad.
I see some purple game boxes behind you. So yeah, you're a big fan. Got it.
There you go. There you go. And it changed my it changed my mind completely. I had a shift in my mind, and I decided to get into real estate and buy my first property.
Mm-hmm.
And right 1 month before the COVID hit, they announced the pandemic in California. I bought my first duplex in Texas.
Mm-hmm.
So I was a little bit lucky in that sense because the tenants that I had, they were Section 8 tenants.
Oh, perfect.
And as you know, right? As you know,
rent don't stop with those guys. That's for sure. Yeah.
Government always pays, right?
Yeah.
So, and that's how I got started. And then about 8 months, I bought another duplex and fourplex.
Nice. Now, was this all self-financed yourself, or did you bring on partners with those? What did you do?
So when I bought my first duplex, I sold stocks of the company that I owned at that time, and I put a down payment.
Got it.
After selling some stocks,
Mm-hmm.
and then I opened the credit line, HELOC, and I bought a second duplex, and I bought a fourplex using my HELOC. So basically, I financed everything by myself.
Got it. All right.
So I bought it by cash with cash, and then I refinanced it.
Cool. All right. So you got into buying small multifamily properties, duplex, fourplex type stuff. And then how did you get into the whole hard money lending space and maybe define what that means for people?
Yeah, absolutely. So after I bought my fourplex, I've heard about the commercial multifamily space, and I wanted to learn more about how to take down commercial multifamily apartments.
Yeah. And
I joined a group, MFAM, my first million in multifamily.
Yeah.
It's Jennings and Yaden Smith are the owners of that group.
Okay. Yeah.
And so I joined that group, and while I was learning about multifamily, how to underwrite it, I was connecting with people, networking with people a lot. And some people asked me for private money. And I was like, okay, I think I could do it. I had a little bit in my bank account, and I decided to, lend those money out. And after that, a few more people approached me, but I was tapped out.
Yeah.
So I found a few investors, and we invested into a few more deals.
Okay, so maybe explain how that works. So I get it. You've got your own money. You loan that out. However that works, typically, short-term type loans. people find out that Eugene's got some bucks. You've got more people saying, "Hey, Eugene, lend us money." You run out of your own cash. So then you brought on some other investors to do this with you. I'm assuming that they loaned you some money and then you loaned out their money so that you could make a little bit of a spread there, or how do you make a profit on the investors that work with you?
Absolutely. That's a great question. So there are multiple ways of doing this, right?
Mm-hmm.
The way I've been doing this is just the way you described it.
Mm-hmm.
So once I ran out of my own cash, I saw more and more deals coming my way. So I found a few investors, and I presented some deals. I told them, like, this is what we are doing. This is how much I can pay you.
Mm-hmm.
And these are the deals that we are going to get into. So I was very transparent. So I was paying my investors, 10-11% on their money, and I was making a little bit of spread on top.
Right. So how would you organize that with keeping transparency? Were your investors loaning you the money like on a promissory note type thing, and then you would loan it out on a property, and you'd be dealing with the active real estate partner, or how do you organize it under that situation, Eugene?
Yeah, so there were a few different structures that I've been going through.
Yeah.
While I've been doing private money lending.
Mm-hmm.
So the first structure was, I had a deal. I reached out to one of my investors, and I told my investor that, this is the deal. This is how much you can get paid. And in that deal, we entered as partners.
Okay.
So, and basically I've been paying 50% to my investor and 50% to myself until the maturity of the loan, right? And those were like very short-term loans, 5 to 6 months.
Got it.
So this is one structure. Another structure that I did was through this software called TribeVest, tribevest.com. Mm-hmm. So what that software allows to do is it allows to create an LLC with your investors, and basically you're entering into the LLC as a multi-member. So basically it's a multi-member LLC. You and your investors are in the same LLC, and you have a way to structure how will every investor be paid. Very cool. Everything is software.
Yeah.
And so I did a few deals through that software, and basically after doing maybe 5 to 8 deals with my investors, I had more and more deals coming my way.
Yeah.
So I thought to myself, well, I can't really, I need some better structure. I need something better in order for me to keep growing the business, because I thought, well, I have higher demand than I have supply, and supply being the capital, right, in this case. So I thought, well, I think there is something there. And what I decided to do, I decided to open a fund.
Okay.
So I decided to open a debt fund.
Yep.
And we've been actually live for maybe about 2.5 months already. Mm-hmm. I also have a business partner. We're managing that fund together. But basically, the idea was to open a fund, get more private investors into that fund. Mm-hmm. We would pay high yield returns to our investors and lend those money out short term to real estate investors who fix and flip houses.
Okay.
So, and that's where we're at. I mean, so we're in the process of capital raising. Mm-hmm. And it's going as not as fast as I hoped.
It usually isn't.
Yeah. But
Okay, so that's very interesting, Eugene. And hey, hats off to you for going down that path and kind of scaling up, scaling up, scaling up. Really smart. What you know to to be to be profitable and worthwhile in private money lending, approximately how much capital do you think you need to have access to for this to be like a viable business for you that pays the rent, keeps the lights on, all that kind of stuff? What's your best guess on what a person would need to become a private money lender, a hard money lender, and it makes sense?
so just to rephrase your question so I understand, basically what it looks like in a private money lending space, to keep your like house if you have a mortgage, right? To keep your lights
to create that as kind of as your gig. Now, maybe not at the fund level. You're taking it to the next level. I'm talking about pre-fund type level. So when you're doing the tribe vest and all that kind of stuff, what's your best guess on what kind of a pool of capital you would need at the kind of rates that you're getting for this to really be worthwhile for you?
That's a good question. So I think it could be like for different people could be different.
Yeah,
because right, some people live in states where the life is not as expensive in California. Some people don't have families.
Yeah. Well, okay, let's define it then. And I'm thinking like $100,000 a year. If somebody wants to make $100,000 a year as net, as a hard money lender, how much capital would they have to, taking into account that it's probably not all theirs, they're partnering or they're borrowing money from other lenders, that kind of stuff. What's your best guess?
I would say probably a few mil.
Yeah. That's what I was thinking. Yeah.
Probably a few mil, because so if you're charging, and let's break it down, right? So let's break it down. Let's say you have a few million dollars, and you can turn that $2 million twice in a year if you get into short-term loans that are 6 months each, right? If you're smart and you get your money back in 6 months, so you can also redeploy it for another 6 months. So basically, $2 million becomes $4 million, right?
Yeah.
When you lend. So on $4 million, let's say you charge 2% origination fee. That is, let's do a quick math. That is like $80,000.
It's like 40,000, I think, right?
Is it 40 or 80? 4 mil. 2%. I think it's 80,000.
Yeah.
Okay.
Right.
80,000, and then let's say you charge, and then you have a few points coming in, just for
the spread
on the spread side. Yeah. And a few points. 4 mil is 40. It's 40,000. It's 80,000. Let's say it's 2 points, right? So it's 80,000. So it's 160. So
really, even with $1 million, if you turned it twice, you could be generating perhaps $100,000 for yourself, even if it was other people's money that you're using.
Yeah.
Basically on the points. Interesting. All right.
Yeah. So you probably need even less than $2 million.
Yeah.
If you want to make 100,000 a year.
So typically, when you're loaning this out to flippers, what kind of they're paying points, they're paying interest. What kind of interest rates are they paying these days?
Oh gosh. So we are an asset-based lender. So that means I don't ask for any type of documentation, no income verification.
Yep.
Right. So we're more about asset. Of course, I look at the borrower as well and look at the character of the borrower. So that's important to me as well. And I'm sorry, what was the question?
How much do you charge interest for your flippers?
Okay, so we charge about 13% a year.
13?
13.
Okay, 13%. They're typically borrowing for 6 months,
For 6 months.
give or take. So,
yeah.
Okay, so you're charging 13%, and you're paying if you bring investors on board to bring the capital, you're paying them out about 10%, 10 or 11%. So the spread is probably 2 or 3% on the actual interest charged. Is that about right?
Correct.
Yeah. Okay. No, I'm just really interested in how the business model works, Eugene.
Yeah.
Smart.
Absolutely.
Okay. And then now you're getting into doing the whole fund idea. Haven't done that myself before, but I do know that is very, very expensive and lots of bureaucracy and lots of stuff involved to get a fund set up. Is that a fair estimation? Like it's not necessarily a super easy task.
Well,
or maybe it is.
Well, I was when I didn't know anything about funds, I thought that when I heard about for the first time when I heard about the fund, and it was a long time ago, I thought it was something that not really reachable. Only like certain people can open funds, but as I learned more and more the real estate game and met more and more people, talked to more and more people, I learned that anyone can open a fund.
Nice.
Right?
Okay,
so
that's good to know.
Anyone can open a fund, and it probably can cost you anywhere from $10,000 to maybe $40,000, depending on who you talk to. Probably depending on what type of fund you need. Maybe it can even go more than that because
I've talked to a few people up here in Canada that are opening some certain kinds of funds. They're into it for 100,000.
Oh wow!
To get it opened
up. What kind of fund is that?
I don't know. Expensive.
So,
but everything seems to cost more in Canada. It's just it always seems to be more difficult to get stuff done up here. I think Americans definitely have it way more dialed in for getting things like this up and running. So that's really good to hear. So you've got your fund going and you're starting to bring on investors for that. Are you still doing the other hard money lending like you were doing before? Is that still part of your business model?
I would say it is.
Yeah.
And it's just because the investors that, for example, that we get into our fund may not necessarily be interested in other deals that I get. So with the fund, we have a specific criteria of the deals that we get into, right? So everything is written down. Investors can see what type of deals we get into before they put money into the fund. So everything is sort of there's a guidelines that is written down inside the PPM docs, right? Private placement memorandum.
Yes.
And outside of it, I have investors that may go outside of the criteria that we have inside the fund, right?
Right.
So maybe they like riskier deals. Maybe they want something else. So
higher returns, that sort of thing.
Yeah.
So within the fund, are people investing in that, and then you're saying, okay, you're going to get a consistent return on your money. Plunk your money in the fund, and you'll be getting a nice little consistent return, lower than they would be getting if they were completely financing a certain flip or something like that. But they don't have to worry about replacing their money, finding different deals. It's you're always bringing opportunities to the fund. Am I understanding that correctly?
Yes, absolutely.
Yeah.
So that's basically the whole idea of being an investor inside the fund is, just being absolutely, I would say,
passive.
Like passive, yes.
Yeah.
So we do all the work. We find deals. We do the due diligence. We do all the documents. We service the loans as well. So I don't have a company that we outsource the loans. So everything we do is in-house, at least right now, and maybe for the foreseeable future. But investors don't really have to worry about any of that, and the returns that they're getting just purely passive.
Yeah, that's appealing. That's appealing. So, what are your goals for the next year or so, Eugene, when it comes to your fund? What are you hoping to get it up to?
That's a great question. So I saw what hard money lending businesses do and how far they reach. Also, just a quick shout out to Kelly Garrett of Rehab Wallet. It's also hard money bank. I basically followed their model. I was in her mastermind to learn about hard money business. So just quick shout out to Kelly Garrett, and basically follow their footsteps. Right now they do about $100 million a year.
So that's the aspiration, is to get there. What out of the next year or two? What would you hoping to get to 100 million in the next year or two, or what's the time frame?
Oh yeah, I mean, absolutely. So even though we just opened, I have very high ambitions. I want to get to 100 million a year for sure. Our fund has a ceiling of $50 million, but we have one extension to extend to 100 mil if we need to. So definitely my goal is to get to $100 million within probably 2-3 years.
Wonderful. Well, that is fantastic. Eugene, I want to thank you very much for kind of explaining how things work with your hard money business. Congratulations to you for all that you've done with this. You've done a lot in a short period of time, and you're off to bigger and better things, that's for sure, in the future. So if our listeners or our viewers want to connect with you and find out more, what should they do?
Absolutely. They could reach out to me. They can either text me or call me at 415-725-0311, or email me at Eugene, EUGENE at y2lending.com. y2lending.com.
Good name. Awesome, Eugene. Well, keep up the good work, and thanks for coming on the show. Really appreciate it.
Dave, thank you so much. And I look forward to chatting with you in the near future as well.
All right, everybody, take care, and we'll talk to you on the next episode.
This episode is brought to you by moneypartnerformula.com. Our Money Partner Formula service allows you to raise all the private capital you need to do all the deals you want while we handle the hard stuff. We offer reliable and affordable done-for-you marketing services that get you investor meetings booked without all the work. So go ahead and check out the website right now, and then feel free to schedule a call with me, and let's take your portfolio to the next level. Again, that's moneypartnerformula.com. Watch investor meetings pop up in your calendar. We handle the rest.